We are in mid of March 2021 and there are just few days left for FY 2020-21 to end. GST portal has also released several new updates recently. Have you taken note of certain key GST compliances to be complied with by 31st March 2021? Are you aware of changes in GST from 1st April 2021? Hi everyone, I am Annapurna from ClearTax. This video will help you know the key compliances in March and April 2021 along with the changes introduced recently in GST. Let's begin with the two important changes under GST applicable from 1st April 2021. Extension of e-Invoicing system to more taxpayers and mandatory reporting of HSN codes in invoices. First on my list is e-Invoicing. If your business has a total turnover at a PAN level of more than Rs 50 crore in any preceding financial years from FY 2017-18, then begin generating e-invoices as per GST law from 1st April 2021. It definitely requires some preparation and system testing in advance. Let me explain what is e-invoice in a gist. The applicable businesses must raise B2B invoices as it has been doing so in the past on its ERP system. Thereafter, it must report the same on the government's invoice registration portal, that is IRP. GST network will validate the invoice details and sign it using DSC. It will generate QR code and invoice reference number or IRN that is unique, and it will send the signed e-invoice back to you. Further, these B2B invoice details will be automatically populated into GSTR1 and wherever applicable will also generate e-way bills for you. Note that if you fail to be ready by 1st April 2021, then you may be subject to a penalty of up to Rs 25,000 per invoice for not issuing GST compliant invoices and can affect your GST registered customers also who cannot claim validated ITC. The government has also released guidelines for taxpayers with a turnover ranging between Rs 50 crore to Rs 100 crore to smoothly implement the system from 1st April 2021. Also, the government has already enabled the applicable GSTINs for e-invoicing on the IRP, that is currently e-invoice1.gst.gov.in. However, you might have to recheck the same by visiting the portal once, and if you find that your GSTIN is not enabled, then you can voluntarily request for enablement. Navigate to Registration tab, click on e-invoice enablement, enter GSTIN and CAPTCHA code and press Go button. Thereafter, get registered by visiting registration, that is click on portal login, enter the GSTIN CAPTCHA code and click on the Go button. Now you can log in easily from the next time. To know all about e-invoicing, then the methods of generating IRN for the e-invoices and how to implement it easily in your organization, check out our all-in-one e-invoicing playlist on ClearTax YouTube channel. The link of which is given in the description box below. ClearTax provides you complete e-invoicing solution that is fast, dependable and affordable. To explore the software or get a free demo, visit einv.cleartax.in or call us at 1-800-572-8288. And if you are a tax professional, then you can earn money through our client referral program, while your clients can get a 10% exclusive discount on e-invoicing software purchase. Hurry up! Visit the link given in the description below to avail this limited period offer. Moving to the second big update applicable from 1st April 2021. Remember to quote a 6-digit HSN code on your tax invoice, which is now mandatory if your total turnover exceeds Rs 5 crore. If your total turnover happens to be less than or equal to Rs 5 crore, then for B2B invoices, you must quote a 4-digit HSN code mandatorily, whereas for B2C invoices, it's optional for you to quote a 4-digit HSN code. There is an implication due to this change in the GSTR1 return filed from April 2021 return period onwards. GSTR1 format has been changed for Table 12 through October 2020 notification. The field total value in column 6 of Table 12 of GSTR1 stands removed, and instead the taxpayer must select the rate of tax from the drop-down. The changes will be reflected on the GST portal from 1st April 2021. Let's look at the list of GST to-dos before I can explain how to carry out each task in a gist. First of all, here's an update from the GST network for all taxpayers operating from these 8 banks, that is United Bank of India, Corporation Bank, Andhra Bank, Allahabad Bank, Oriental Bank of Commerce, Syndicate Bank, Dena Bank and Vijaya Bank. If you happen to operate bank accounts here, then you may know by now that these banks got merged with other PSU banks in the last 2 years. From 1st April 2021, the old IFSC code or IFSC and older bank account numbers will no longer be valid for payment processing. So you must update the new IFSC or IFS code and any revised bank account details on the GST portal as a non-core amendment to GST registration. It would be relevant for making future GST payments and smoothly obtain refunds. All you have to do is to visit gst.gov.in, navigate to the Services tab, click on Registration, click on Amendment of Registration Non-Core Fields link. Next, select the tile known as Bank Accounts. Make the necessary changes in bank account details and IFSC code. Verify and file the amendment application using DSC or EDC as may apply. You will receive ARN and the GST database automatically gets updated without any intervention of the tax officers. You may also have to update all such refund applications that fail to get processed due to validation errors pointed out by the Public Financial Management System (PFMS). To update the bank details in the refund applications currently under process, you may have to contact your jurisdictional tax officer for guidance. It is because there is no window on the portal to revise the refund application in form RFT01. However, recently RFT01W is introduced on the GST portal that will allow you to withdraw refund applications. Secondly, GSTR 9A has been officially scrapped for composition taxpayers from FY 2019-20 onwards. While most of us know that the annual return in revised form GSTR 4 has been introduced since FY 2019-20, it was expected that the GSTR 9A will be suspended. So if you are wondering by when you must file GSTR 4 annual return, the GST portal will allow you to file the GSTR 4 for FY 2020-21 up to 30th April 2021 without any late fee. The next update is again very much relevant for all the composition taxpayer. Every composition taxpayer has already registered under Section 10 of the CGST Act or registered under the cover of the CGST Rate Notification Number 2/2019 must re-opt into the scheme for the upcoming financial year, that is 2021-22 by 31st March 2021. You must file the form CMP02 and the GST portal has already released a window for the same. Visit gst.gov.in and navigate to the Services tab. Click on Registration, Application to opt for composition levy and make the declaration. Complete verification and file using the DSC, e-signature or EDC. This doesn't end here. Within 60 days, that is by 30th of May 2021, you must also file another form known as ITC03 on the GST portal declaring that any input tax credit claims to be reversed on the closing stock. Since mostly it's going to be an existing composition taxable person, there will be no such cases, but still a nil filing is compulsory and the GST portal has recently introduced functionality for nil filing of ITC03. Check out our pages for the detailed steps, the link of which is given in the description box below. Coming to the fourth update, all businesses who are exporting without paying IGST under the cover of Letter of Undertaking or LUT must make a note of this. A fresh LUT in form RFT 11 is required to be filed by 31st March 2021 for the upcoming financial year 2021-22. Visit gst.gov.in and go to the Services tab, click on User Services, select Furnish, Letter of Undertaking or LUT. Select the relevant financial year as 2021-22. If LUT has been already furnished manually for any previous tax periods, then please note that you have to upload the same by clicking on the Choose File option on the same window. Make a declaration, obtain 2 witnesses, enter authorized signatory and file using DSC or EDC. Fifth on my list is that if you are a QRMP taxpayer, that is quarterly return filing and monthly payment of taxes for the quarter of January-March 2021 and you wish to opt out for the next quarter, then this update may be relevant for you. Alternatively, it might have happened that you were eligible for QRMP for the quarter of January to March 2021, but by mistake you opted out last time. Here's a chance for you to change the QRMP profile on the GST portal between 1st of February 2021 up to 30th of April 2021 for the upcoming quarter, that is April to June 2021. You can use ClearTax GST software to easily change your QRMP profile in a few clicks, along with the client communication and tracking features. Visit the link to the software given in the video description. Sixth on my list is the year-end GST related reconciliation for FY 2020-21. Check if any of the expenses covered on reverse charge or RCM. If yes, then whether the taxes on the same have been paid by you under reverse charge or RCM. Also note that every month a consolidated self-made invoice must be prepared in the specified format for expenses paid under RCM. However, it's high time that it's done by the year end. Next, as a recipient of eligible input tax credit, reconcile GSTR 2A with purchase register for the entire financial year 2020-21 so that you can identify any missing invoices or debit notes not reported or erroneously reported by your supplier so that you can follow up with them by the time they file your GSTR 1 for March 2021. An important update here is that you can claim ITC on bank charges, hence submit your GSTR into your banker, while you can confirm online credit and monthly bill. On the other hand, identify any pending ITC reversals pertaining to financial year 2020-21 or earlier tax periods. Reversals could be on account of payments not being made to your supplier before the expiry of 180 days, ITC not claimable as covered under the negative list under section 17 subsection 5 of the CGST Act, but claimed anytime before, ITC availed on any stock lost or destroyed during the year. Note that you can insure the entire value that is cost plus the tax value so that insurance can be claimed for the full value. ITC claimed on personal expenses. Now it can so happen that in ledgers such as general expenses, telephone expenses, traveling expenses and certain percentage relates to the personal nature. So ITC availed on these expenses had up to 5% has to be reversed for personal expenses. Sale of fixed assets during the year where ITC has been claimed on it, and at last exempt supplies as per the formula. Last on the list of year-end GST related reconciliation is adjustments of advances paid and received. Thank you for watching this video. If you found this video useful, please give it a thumbs up and do spread the word by sharing it with your friends and peers. Also, if you happen to be seeing this video for the first time, don't forget to subscribe to ClearTax channel and press the bell icon to get instant notifications whenever we post new updates on taxes and finance. Do leave us a comment for all the queries that you have and video suggestions if any. We'll be happy to take them up. Until then, see you in the next video.